Hey everyone, on May 2nd, Ford CFO John Lawler had a discussion with Wall Street investors, really highlighting the strength of Ford's business. So I pulled out some of the key highlights from the CFO's comments and I wanted to share them with you because I thought they were important for Ford stock investors. So let's begin. Starting with first quarter sales were up 9% year over year, and its profit margin was 8.1%. That was up 100 basis points from the same quarter the prior year. Of course, car companies like Ford have been benefiting from the supply chain shortages, being able to sell their cars at higher prices, producing their higher priced models, and focusing on efficiency and effectiveness of sales. And it's been really good, and Ford right now is highlighting that. For the quarter, they delivered 700 million of adjusted free cash flow. That was after investing billions of dollars, after making their investments, their capital investments. That still left over $700 million of free cash flow. And the company now has $29 billion of cash. Their customer focused business segments, wholesale sales were up 6%, with $2.6 billion in earnings before interest and taxes at a 10.4% margin. So, really, really good margins here for Ford. That was 400 basis points higher than a year ago. And the CFO says that was from a favorable mix and higher volume. In other words, what I mentioned earlier, they were able to sell the cars that are more profitable and sell more of them, right? That's really good news for Ford. There are some models that sell for lower profit margins, and so Ford was able to focus on not producing those and producing the ones that were higher profit margin because there are supply chain shortages industry wide still, not as much as last year, but still. And so you can't produce your full capacity, so you have to make choices. Which models are you going to produce? And that's the same at many, many car companies. So the supply of cars has decreased. I'm talking about legacy cars and ICE cars, I mean. And so with that decrease in supply, manufacturers are able to produce the higher profit models, which is what Ford has been able to do. Speaking to their EV investments, they expect Ford Model E, their electric division, EBIT margin to improve to around negative 20% for the second half of this year, reflecting stronger per unit contribution margin and significantly higher volumes. So they're ramping up production of electric vehicles. As they ramp up production, they're expecting to narrow the losses and make progress towards profitability in the EV segment. In fact, we expect Model E contribution margin to approach break even this year, and we continue to target positive EBIT margin for our first gen vehicles by the end of 2024. So making really solid progress in the EV segment while they're delivering lucrative profits from the ICE cars. Ford Pro, which is their professional segment, delivered an 18% increase in sales, and earnings before interest and taxes improved by 900 million to 1.4 billion for the quarter at a margin of 10.3%. So really good. These are commercial vans, commercial truck divisions, commercial truck sales, and Ford has done an excellent job here. They have a really strong market share in the US in this segment. And finally, I'll end the video with the outlook for the rest of the year. The CFO says, we continue to expect 2023 adjusted EBIT, earnings before interest and taxes, of 9 billion to 11 billion dollars. So at the midpoint, they're expecting EBIT of 10 billion dollars. In other words, operating income of 10 billion dollars. That's really strong, and this includes the losses from the EV segment, right? Even with the losses in the EV segment, the company still expects to generate 10 billion in operating income. That's really solid considering next year the losses from the EV segment are expected to narrow considerably. They also expect adjusted free cash flow of about $6 billion after capital expenditures of 8 to 9 billion. So even after investing 8 to 9 billion dollars in its capital expenses, they still expect to have free cash flow of 6 billion. And this guidance includes the headwinds that reflect the global economic uncertainty, higher industry-wide customer incentives as vehicle supply and demand rebalance. Wow. So really strong position that Ford is in right now, given that they expect $10 billion in operating income, incorporating in the losses from the EV segment, incorporating in the economic uncertainty, and incorporating in the fact that supply of ICE cars are going to get into better balance towards the end of the year because the supply chain shortages are going to ease up and there's going to be an increase in supply. So given all of those headwinds, they still expect to generate those 10 billion in operating income. So really impressive what Ford is doing. And I'm not a fan of car companies, as you might know following my channel. I think it's very risky, cyclical business that requires a lot of investment with uncertain prospects, so much competition, the relationships with labor, all of that. For all those reasons, I'm not a fan of car companies, but I can highlight, I can see a good performing company when I see one, and Ford is having a strong year. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.